Welcome. My name is Deko Mohammed. Today I want to focus on taxation. Remember, initial class we have two initial classes on taxation. We started the taxation of individual. For those who have not seen it, please you can refer under this is my channel Deko Mohammed. It is free. You can access it. So today we want to study the taxation of partnership. Under taxation of partnership, we are going to see how we tax partnership, how a partnership taxed. So I'm having an illustration here that was tested under CASNEP in May 2014, question 3. It was tested in May 2014. So I'm going to read out the question. For those who may have the question, you can download on all the website of CASNEP. It is free. You can download the question in advance, so we illustrate. But if you don't have, I'm still going to read in the board. You are going to copy in the board. So I still remind you, please subscribe, like, and share for more free lessons. You are welcome. So let me read out the question. So we are told Halima and Shirono are partners trading as Hake Enterprise and sharing profit and losses in the ratio of 2:1 respectively. The partner presented the following income statement for the year ended at 1st December 2013. Income. We have the gross profit as 3 million, discount received 200,000, interest on bank deposit net 60,000, farming income 280,000, foreign exchange gain 165,000, insurance compensation for stolen motor vehicle 200,000, total 3,896,000. We have the expenses. General expenses 1,750,000, loss on disposal of equipment 30,500, license and permit 15,200, stamp duty 2,600,000, interest on capital. We have Halima 184,000, Shirono is 145,000. Next, we have the salaries and wages 1,200,000, subscription to trade association 28,000. Rent and rates 40,000, purchase of furniture 42,000, legal expenses 120,000, farm works at cost, 30,000, farm work at cost. Net profit, total expenses 3,587,300. Then the net profit is 308,700. Additional information. You are told salaries and wages include shilling 420,000 and shilling 630,000 paid to Halima and Shirono respectively. Number 2, rent and rates relates to a period of 15 months commencing 1st January 2013. Number 3, the general expense comprised of cash embezzled by the cashier 600,000, partition of the office 120,000, partnership jubilee celebrations 250,000, donation to National Disaster Committee 430,000, others office expenses 450,000. Number 4, legal expenses include backings fines paid to the local council 15,200, defending the partner in an income tribunal 22,300, drafting tender documents 47,000, drafting lease documents bracket 100-year lease 35,500. Required. Number 1, adjusted partnership taxable profit or loss for the year ended at 1st December 2013. Number 2, allocation of the taxable partnership profit or loss computed in C1 above. Now that's all about the question. Now we are going to illustrate. Remember, I can still remind you, for those who can download, you can download the question. It is May 2014, question 3C. Now, since my space is limited, I'm going to wrap this side so that I illustrate the question. I have it here on the paper, but I hope you copy the question so that if I wrap, you still access the question. Now allow me to wrap the question so that I illustrate. Now, remember, this is Hake Enterprise. Hake. We have the heading here. Hake Enterprise. We are going to prepare adjusted taxable income. The requirement was prepare from on 1 taxable income. We are told adjusted partnership taxable profit. Adjusted taxable profit or loss for the period ended. It was December 2013. Now, before I start illustrating this question, there are some few things I have to remind you. Whenever you are tackling questions for partnership, we have to know what we call disallowed and allowed expenses. Remember, disallowed expenses, these are the expenses that do not contribute to the profit of the company. They don't contribute to the profit of the company. But allowable expenses, they contribute. Now we have several disallowed expenses, and also we have several allowed expenses. I still remind you, please go and read more about allowable and disallowable expenses, because they are going to be helpful in tackling this question and so many questions under taxation of partnership or taxation of companies. Now, remember, we have two ways of preparing this partnership or taxable of income of person. You may use the gross profit or the net profit. If we are using the net profit, for this case, we are going to use the net profit. We are going to see, we start with the net profit, then we add back the disallowed expenses, then we less the non-business income, we less the capital allowances, then we less, also we get our taxable profit. So let me start with the question. Let's start with the net profit. Net profit. Then let's have two columns here, shillings, and also here, shillings. So let's start with the net profit. If I look at my question, the net profit is 308,700. 308,700. Now let's say add back. We are going to add back the disallowed expenses. Disallowed expenses. Add back disallowed expenses. Now, let's go to the column for the expenses. We are going to start here. We have the general expenses. But remember, whenever you tackle any expenses, you have to look. After looking the initial trial balance, then is there any adjustment? Because the additional information will also affect. So you have to confirm first the additional information. Because you may find an expenses may be allowable in the trial balance, but the additional information can make it disallowed. So you have to check it before computing it. So you compare the additional information with the initial trial balance. For this case, general expenses, it is 1,750,000. But if you see additional information number 3, we are told the general expenses comprise of, so we have cash embezzled by the cashier, we have partition of the office, we have partnership jubilee celebration, we have donation to National Disaster Committee, we have other office expenses. Now you see, out of these five expenses, there are some expenses which are allowable and there are some expenses which are disallowable. So we are going to pick only the disallowed. So if you take these general expenses as 1750,000, let's go and see the disallowed. The first one is cash embezzle. That is a disallowed expenses because that's an embezzlement, it's a fraud, so it's not allowed. So that's not going to add to our profit. So we are going to start with the cash embezzled by the cashier. So cash embezzled cash embezzled by the cashier. The cash embezzled by the cashier, the amount is 600,000. 600,000. Now, next is partition of the office. Partition of the office. So that is a disallowed expenses. Partition of the office. The amount is. Remember, this partition also qualifies for wear and tear. You're going to see later, you're going to prepare the wear and tear for this partition. It will come later. After partition, we have is the partnership by Jubilee celebration. That is also a disallowed expenses. Partnership by Jubilee celebration. The amount is partnership Jubilee 250,000. 250,000. So the last two expenses, the last two we are not going to use because donation to national disaster, all donations are disallowable except the one for, we only allow the one for charity. But this one is a national disaster. Disaster can be a charity, so we are not going to use a donation. But if this donation was a political donation, we could have taxed it because that's a disallowed. Since this a charity it is a disaster committee, national disaster, we are not going to tax. It's allowable. The same with the office expenses. Those are normal expenses. So the last two we are not going to use. So if you have seen this question, out of the general expenses, out of the 1750, we only tax the cash embezzle, the partition, and the partnership. We left out those two. That's why I was saying you have to look the additional information before completing the question. So we are done with the general expenses. Next expenses is loss on disposal of equipment. Loss of disposal of equipment. The amount is how much? Loss on disposal of equipment? 3,500. 3,500. Next, license and permit. That's a normal expense we are not going to tax. That's a normal expenses. Stamp duty, we are going to tax that. Stamp duty. 2,600. Next expenses, after the stamp duty, we have the interest on capital. Interest on capital is disallowed, so we tax interest on capital. So we have the Halima 184. Halima. We have here Halima 184,000. Then after Halima, it is Sherono 145. Sherono 145. Sherono 145,000. After that, next expenses is salary and wages. Salary and wages. So salary and wages is 1,200,000. Remember, salary and wages is a normal expenses. But if you look at the additional information number 1, we are told salary and wages include 420,000 and 630,000 paid to Halima and Sherono respectively. Remember, Halima and Sherono are partners. So salary to partners is allowable. So you see, out of that 1,200,000, we only tax the one given to the partners. So we are only going to tax the salary to Halima and Sherono, which is 420 and 630. So let's say salary to partners. Salary to partners. We have here the Halima is 420. Let's have here Halima 420,000. Next, Sherono, the salary for Sherono is 630,000. Sherono 630,000. After salary to partners, the next expenses, subscription for trade association. That's allowable expenses we are not going to use. Next is rent and rate. Rent and rate is 40,000. But remember, our period is only from January to December 2013. If you look at the additional information number 2, we are told rent and rates relates to a period of 15 months commencing 1st January 2013. And remember, the financial statement that the tax that we are going to prepare is up to December. So from 1st January to December, that is 12 months. So the extra month we are going to tax. We are going to use it here. That means from 15 minus 12. Remember, a year has 12 months. So if you subtract 15 from 12, you get 3. Now you say rent and rate. Rent and rate. We have here the remaining month, the extra month, the prepaid month is 3 out of 15. The rent and rate amount is 40,000. So we multiply by 40,000. So if we check calculator, 3 over 15, 3 divided by 15, multiply by 40,000, I'm getting 8,000. So here I'm having 8,000. 8,000. Next expenses after salaries, after rent and rates, is purchase of furniture. Remember, all purchase of assets, fixed assets are disallowed. So we are going to disallow this purchase of furniture. Purchase of furniture. Purchase of furniture. Purchase of furniture. The amount is 42,000. Remember, also furniture, it qualifies for wear and tear. We are going to use it later. After purchase of furniture, the next expense is legal expenses. But remember, additional information number 4, we are told legal expenses include parking fines paid to the local council, defending the partner in an income tribunal, drafting tender documents, drafting the lease documents. So out of these 4 expenses, we are going to use only the disallowed. The first one is parking fines. All fines are taxable. So we are going to tax that. Parking fines. Parking fines. Parking fines. Parking fines. Parking fines paid to the local council. Paid to the local council. The amount is 15,200. 15,200. Next, the next one is defending the partner. That is also disallowed. Defending the partner in an income tribunal. Defending the partner in an income tribunal. The amount there is 22,300. 22,300. Drafting tender document, that's a normal, that's allowable expenses. Drafting lease documents, 100 years. Remember, under lease, it is only allowable up to 99 years, a maximum of 99 years. But remember, this one has exceeded 99. We are told 100 years. That means we are going to disallow. We are going to write it. We are going to use. But if it could have been less than 99, we could not have taxed. But since it is more than 99, we are going to allow. We are going to disallow. So, drafting lease documents. Drafting lease documents. The amount is 35,500. So that's we have exhausted all the expenses from number 1 up to 4. Additional information number 4. So we are going to add these disallowed expenses. Sorry, there is one we left out. Remember, we have what we call farm work. I will recorded the farm work. Farm work is disallowed, farm work. It is there in the first column where we have, after the legal expenses, we have the farm work. The last one is farm work. After the legal expenses, we have the farm work. Farm work. Farm work cost, the amount is 30,000. 30,000. So, let's add these total expenses, total disallowed expenses. Let's add them. So if I add them, take my calculator, I take 600,000, 600,000 plus 120,000. I add to 250,000. I also add to 30,500. I add to 2,600. I add to 184,000. I add to 145,000. I also add to 420,000. I add to 630,000. I add to 8,000. I also add to 42,000. I add to 15,200. I add to 22,300. I add to 35,500. Lastly, I add to 30,000. 30,000. I'm getting here 2,535,100. So if I add it back to 30,000, 308,700, I'm getting 2,843,843. 2,843,800. Now we are going to deduct if there is capital allowance, if there is a business income. So let's say less. We are going to less. So you see, this we will come back here. The interest on bank. So we get less interest on bank deposit. The amount is 60,000. So we are going to less here 60,000. Next, we are going to less insurance compensation for stolen. Insurance compensation for stolen motor vehicle. So the amount there is 200,000. So you're also going to less the farming income. Farming income. The amount there is 280,000. 280. Remember when I said after this we are going to less the capital allowance, less wear and tear allowance, wear and tear. But remember, we have here partition. Partition qualifies for wear and tear. Also we are having here furniture. Furniture also, we have the partition of the office. Partition qualifies for wear and tear. We also have furniture. Furniture and partition qualifies for wear and tear. And furniture are class 4. So we are going to use 12.5. But still, I'm still going to tackle my next class under wear and tear. We're going to see how we prepare wear and tear. But for now, partition and furniture qualify for class 4. So we are going to apply 12.5 as the percentage. Now we say, let's start with the office partition, which is 12.5 divided percent multiplied by 120,000. I'm getting how much? 12.5 divided by 100 times 120,000. 15,000, coming to 15,000. I'm having here 15. Then after partition, we have also the furniture. The amount for furniture is 42,000. So we are going to apply 12.5% times 42,000. So 12.5 divided by 100 multiplied by 42,000. I'm getting 5250. So let's add this, then we less from here, then we get our adjusted taxable profit or loss. Adjusted taxable profit. 60,000 plus 200,000 plus 200,000 plus 280,000 plus 280,000 plus 15,000 plus 5250. I'm getting here 560, 250. Now if we less, our adjusted taxable profit is going to be 2,843,800 minus the answer. I'm getting 2,283,550. That's all about Roman 1. We have done the adjusted taxable profit. Remember, we started with the net profit. We added back the disallowed expenses. Then we deducted the non-business income, the capital allowances. Then we get our adjusted taxable profit. As simple as like that. But one thing you have to know is that you have to know the allowable and disallowable. As I said, allowable expenses, these are the expenses that contribute to the profit of the firm, like the normal expenses. But disallowed, they don't contribute to our profit. So you have to, there are so many allowable and disallowed expenses. I still refer you to go back and study it. Allocation of taxable profit. Now, I'm going to wrap it here, or I can use here. Let me use this one, this column. Use here. Let's have the allocation of taxable profit. So we are going to allocate that profit. Remember, we have two partners. We have Sherono, we have Halima. Remember, we are having Halima and Sherono. So let's start with the Halima. Halima here. Let's have Sherono. And also let's have here the total there. So salaries, let me begin with salaries. Salaries for Halima is 420,000. 420. Salary for Halima is 420,000. Salary for Sherono is 140. 630,000. 630. If I add 630 plus 420, I'm getting 1,050,000. Next, after salaries, we have the interest on capital. The interest on capital for Halima is 184,000. Halima is 184,000. 184,000. Then for Sherono is 630. For Sherono is 145. 145. Total 184,000 plus 145. I'm getting 329,000. Now, for us to get the profit, the profit shared, let's say we have the profit. Before that, we know the taxable profit. Let's have here the taxable profit. The total taxable profit is 2,283,550. Now we are told, remember in the first question we are told the profit sharing ratio. We are told the profit sharing ratio is 2 to 1. 2 to 1. Now let's distribute this profit to ratio 2 to 1. It means 2,283,550 times 2/3 for Halima is coming to 1,000,000, getting 1,522,000, 1,522,000 to the nearest decimal place is 360, 368, 367. For Shireno is going to be 1/3 multiplied by 2,283,550, come to 761, 183. For us to get this profit share, we are going to take the salaries, add this, then subtract this from these two, because the total amount will be 1,522,367. So we take 420,000 plus 184,000, then say 1,522,367, subtract the answer. I'm getting here 918,367. Such that if you add these three, you're going to get 1,522,000. You can confirm 420,000 plus 184,000, then add to 918,367. I'm able to get 1,522,367. We do the same for this. We take 630,000, we add to 145,000, then subtract 761,183 from the answer. If we add 630,000, add to 145,000, 775,000, subtract 761,183, subtract the answer. I'm getting 13. Stroke loss. So Shireno is going to have a loss of 13,817, such that if I add 918,367, subtract 13,817, total here is 904,550. Distribution. Remember, for me to get this profit share stroke loss, I take, remember this profit what we call the adjusted profit. We have taxable profit, we know. Now, from this profit, we distributed between Halima and Shireno in the ratio of 2 to 1, such that Halima will have 2/3 multiplied by 22,83,550, which will give you 1,522,367. For Shireno, you take 1/3 multiplied by 22,83,550, which will get 761,183. Now, for us to get the profit share or loss, we take the salaries, we add the interest capital, then subtract the taxable profit from those two. You get this amount. The same for Shireno. You take the taxable profit of this, then subtract these two. Remember that this Shireno will going to get a loss. So minus 13,817. Such that if I take 1050, plus 329 plus 904,550 will give me the total taxable profit of 22,83,550. That's all about this question. I hope you enjoyed. So remember, please subscribe, like, and share for more free lessons. Next time we are going to do the wear and tear. We are going to see class 1, class 2, class 3. We are going to see the industrial building, the building allowances. So stay tuned. Thank you for watching. May God bless you.